Zach Nami here with Insurance Office of America and ZachNami.com. Here to talk to you a little bit about the hard market, why we're seeing an increase in premiums, and what's causing it, some of the main factors at least. First is interest rates. In the bond market, we're seeing record low interest rates in the bond market. Traditionally, insurance carriers were able to invest dollars into the, let's call it the 10-year Treasury bond, U.S. 10-year Treasury bond, and make a healthy return. Like back in 1990, they were making around 8%. Today, they're around 1%. It fluctuates, but those are the general numbers. They used to be able to offset losses on the claims side with the investment returns on the bond side and wherever else they invested. Treasuries happen to be a large area. They're down, so now there's no offset for those claims losses. The other one is we're seeing social inflation and nuclear verdicts. Judges are more likely in awarding larger verdicts to plaintiffs. There are more attorney advertisements out there that are taking our attention. There's more social messaging through using technology and more advanced psychological tactics that are being used to sway people's decisions and thinking on things. We're seeing larger verdicts. We're seeing more activity, and therefore that is driving premium up. When the cost of those claims continues to rise and you have less investment return on the bond market and in other investment areas, you sort of have a perfect storm for increased premiums in the insurance market. The other reason we're seeing increased premiums is that we've had a pretty tough year, or we had a pretty tough year for natural disasters and weather events. We had floods in Nicaragua, we had hurricanes here in the United States, we had tsunamis in the east. There were several large weather events that racked up some pretty big bills and caused some pretty massive damage. The last thing is that we've seen an uptick in auto claims over the past 5 years or so, really in our nation. And I think that that can be contributed to a massive use or overuse of cell phones in vehicles. One of the ways to protect your company greatly is to have a cell phone device usage policy enforced and implemented. So the important thing is to have the policies that will protect you from punitive damages and will help you control the controllables. There's a lot out there. That's what I'm here to do. I'm here to help you put together those pieces so that you get the best terms and conditions in the insurance market that the insurance market has to offer. Focusing on things that are controllable, like your schedule rate. What is the number, what is the rate that your insurance carrier has assigned to you based on how they feel your company will perform? There is a number and there is a rate that most insurance agents are not going to talk about much. And that is, there's a number or multiplier that gets applied to your policy called the schedule rate that controls a portion of your premium. You also have an experience mod and some other really important programs that you can take advantage of and get credits on your insurance policy with just by making sure that you check the box. Thank you, and I look forward to working with you soon.